for the fourth session on LRS, NRI, OCI transactions and other reporting aspects and interplay with income tax. To develop on this subject, we have CA Ravi Jain, sir. Can I request Pramod R. Hegde, our Vice Chairman, to escort the speaker onto dais and then welcome him with the floral bouquet. Thank you, Pramod. I have a privilege in introducing Ravi Jain, sir. Ravi has a varied experience of about 30 years in tax and regulatory space, including managing small to mid-sized practices, and proud of being part of PwC GMS practice for at least 15 long years. Ravi specializes in advisory, policymaking, compliance, etc. in the areas of expatriate and individual tax, mobility, immigration, FEMA, and payroll. He has helped several companies set up and structure their India inbound and outbound assignment program. He is currently working with corporates extensively on advising implementation of the new wage code. Ravi has successfully done several representations before authorities to get the procedure, ITR forms, and laws rationalized for larger good of foreign citizens, HNIs, and individuals on personal taxation. Ravi holds a postgraduate degree in commerce from Delhi School of Economics, New Delhi, and is a fellow member of Institute of Chartered Accountants of India. With this brief introduction, I present before you CA Ravi Jain, sir. Over to you, sir.
Hi, good evening, friends. It's my privilege to be amidst you. I'm like returning to the institute and feels like coming back home after many years. So I'm extremely elated to be here amidst this learned fraternity. I used to come here long years back, and then the profession, it was so demanding that I almost forget. So I'm guilty of that. But I was just talking to Mr. Manjunath that, now and with Vivek pulling me, maybe I'll be spending some more time here. Thank you for you all gathering here. I know that this topic which we are going to cover today is kind of all over the place, slightly complex and all, but we will try to do justice. So as you all know that we will be focusing more on NRI, OCI transactions, LRS, etc. But what I intend to do is maybe give a broad overview first on, on the framework of overall FEMA and how foreign exchange regulations in India evolved. So I will take you slightly into the history. Those who are totally familiar, please bear with me for some time before we actually delve into the actual topic. But I feel that it is justified to spend some time on how it evolved, right? So what I will do is I'll talk about the applicability of FEMA and maybe some important key terms like repatriation, resident definition, authorized dealer, and all of that, because capital account transaction, current account transaction, because all of this we will be using when we will be talking about LRS. So it will help us to relate back. And then we will of course delve into the LRS actual, where so many notifications back and forth has created a lot of confusion. So where we stand today and what is coming in the future. So we'll try and see whether we will get some clarity on that, right? So as you all know, in fact, if I recollect back when I was writing I was doing my CA, writing my CA exams way back in 1990, there was no FEMA. It was FERA, right? FERA 1973. And that used to be like extremely prohibitive, restrictive law. It was totally regulatory, right? And that was the time, 90s, we all know that liberalization started. We had new industrial policy. We were moving into the era of liberalization. So it was required that with that kind of a prohibitory, extremely regulatory, and more like punitive kind of a law, it was difficult to open up sectors, right? So the FEMA was obvious in the asking, and therefore FERA, from regulation, it became management. So like FERA became FEMA, right? So the word itself says that now we were willing to do the management and not the regulation. So we were more open. So the idea was, the objective, as you see, was to kind of regulate foreign trade. Facilitate foreign trade, not regulate, and also see that the inflow of forex is smooth. So those were the objectives. So that the foreign trade with India and all kind of improves and goes much better. So with that objective, FEMA came in. So it applies to whole of India, but interestingly, it applies to branches and businesses outside as well, if it is controlled by a person resident in India. Is my voice okay, or do you want me to adjust the mic? Okay. So having said that, any contravention by anyone who is doing outside India also can be a person who is in default under FEMA. So that is also a possibility. So with that objective and with that kind of a spread, FEMA became a law. It came in June 2000, right? And then how broadly it is structured is roughly in 49 sections, of which section 1 to 9 is substantive, and the later sections are more procedural in nature. So I'm just giving an overview. But overall, foreign exchange management framework, if you look at, is not only guided by FEMA, right? So it has various acts, regulations, RBI circular, master circular, notifications, policies, and that's where it becomes confusing, right? Which one to follow when? What takes precedence over what, right? So earlier, initially, RBI in fact issued 25 notifications, of which most of it dealt with capital account transaction and some dealt with other. And then it followed a series of revision of those notifications. So it really became confusing. So then they resorted to a practice of issuing master directions. And prior to master directions, they were issuing master circulars. So master circulars, they withdrew, and then they came to master directions. The idea of master direction is that it's one consolidated direction. As and when changes is required, they come up with, and it is for the purpose and not just like ad hoc. Specifically, and for authorized dealers also, they have a separate set of directions called AP directions, circulars. So those are the directions which the authorized dealers, they follow. So this is the overall framework which takes the entire kind of space of foreign exchange management here. Okay, so with that, maybe I will dive into some important key terms on FEMA. So with this kind of a background, now where we stand. So like I was talking about authorized person. So who is authorized person? So authorized person can be any person who has power to deal in foreign exchange, right? It can be authorized dealer, it can be your money changer or banks who has been specifically authorized under section 10(1) of FEMA by RBI. So they can deal in this. Foreign currency account, similarly, account which you can open and hold in any currency other than India, Nepal, and Bhutan. So that's like a foreign currency account. Now, very interesting. Let's talk about the person of Indian origin. With history of India, we all know that, so we had many people who migrated but had links to India. So the defined person of Indian origin is anybody who in past has held Indian passport, or whose parents or grandparents anytime were born or were permanently residents or citizens of India. And also in case of a marriage and all, if you are a spouse of an Indian citizen or of any of those persons above, like if my grandparents of my spouse were Indian citizens at some point in time, then I become a person of Indian origin. Now, to formalize this, we have something called a overseas citizen of India. Now, for overseas citizen of India, specifically, they hold a card, OCI card, and that's like a OCI status issued under Section 7A of the Indian Citizenship Act. Actually, if you consider that you are a PIO, you can actually apply and get an OCI. but it is like for a foreign national difficult to get it if they are outside. So sorry, if they are inside India, because if they are in India and are permanently residing, then they can apply, and unless they are able to prove their links, right? They have to prove all these links that they had their ancestors and all those linkages there. So very difficult to get passport of grandfather and prior to that, right? So how will we prove the linkages? So what can come handy is maybe a magistrate certificate that in the particular village or taluk where you were staying, if they can go back and see the records of birth and all of that, from there, if a magistrate can certify that, yes, this X person with this lineage was staying here, that can be one documentary evidence to then provide to the authorities. For those who are staying abroad, can actually apply online also through Indian Embassy. So there is actually a website called ociservices.gov.in. So they can apply online. They can submit the forms, submit all these documents, originals. These can be verified at the embassy. Then you will be called for interview to check. They will actually check that whether you had those links, etc., or not. And then they will do the biometric. And if finally satisfied, they'll issue you an OCI card. So why I'm discussing so much on OCI card is that it has a special status, right? So with an OCI card, you can pretty much do everything which an Indian citizen can do except two things. Yeah. So what are those exceptions? You cannot vote. Okay. And what you cannot do is you cannot buy agricultural land or farmland, etc. But for these two, anything and everything you can do. So you don't have to go for visa. It's like a multi-entry visa anytime, every time, right? So it becomes very, and this is, so like long back when I go back to our earlier generation, and there were people who went out and for good reason. And now that India is also booming and we have a lot of scope here, so people are looking at India again back. So they want to now come back to India, our our earlier generation. So I see a lot of people actually applying for OCIs so that they can come and now invest and stay in India more comfortably, right? So that's the reason I thought I'll go a little deeper into this. But if you do not have an OCI card, doesn't mean you are not an PIO. So PIO is a generic term. If you fulfill these conditions which are mentioned here, then you are a PIO. Now, who is so that's on the PIO. Who is an NRI? So a non-resident who is an Indian is an NRI. So Indian citizen, non-resident is a NRI. Okay. Now, let me deal with this term repatriation outside India. So which means I am repatriating foreign exchange outside India through an authorized dealer. So suppose if you are traveling and you're buying foreign exchange, so it is like repatriating foreign exchange outside. Or you are buying and then remitting it for some purposes, current or capital account transaction through authorized dealer, then that's like repatriating foreign currency outside. And similarly, repatriation in India is same. If you have realized something, you have sold or made some transaction overseas and you want to bring in the realized foreign exchange in India, is repatriation into India. So that's like repatriation. Then let's quickly see section 3, which mostly talks about dealing in foreign exchange. Now this section does not distinguish between capital and current account transactions, so this equally applies to both. Now, what does the term deal mean is here? Deal can be buy or sell, both. What does transfer mean? Transfer is, as we know, is a little more broader. It can be sale, buy, mortgage, exchange, gift, loan, etc. Everything is covered there. So if you read how it starts, is save as otherwise provided in the Act. Okay, so there are specific provisions in the Act or through notifications which allow, but for that, no person is allowed to deal or transfer. So it's like that. Yeah. So it's like a negative definition where they say nothing of this sort is allowed to deal or transfer any forex to any person who is not an authorized person, or to make payment or receive. So all of this is a denial, but there are specific provisions which are provided which allows, then that is fine. But here one caution is any of these transactions must be routed through authorized dealer. So whenever you are repatriating in, repatriating out, or doing any transaction, one party has to be authorized dealer. If you are not doing through authorized dealer, then that's a contravention of the law, and no compounding. That will be dealt by enforcement directorate straight away. So that's very, very important point to make a note. Now let's move to the most important aspect of residence definition, right? So there is a separate definition of residency under FEMA, which is, if I compare it with income tax, is like very dear to all of us, where we have resident NOR and NR. And that goes with the financial year concept. So when I have to define residency in Income Tax Act, we go for our number of days of stay and all those rules in the financial year. But when we have to look at definition of FEMA, then we go to the preceding financial year. Okay, so for the simplicity's sake, let me call it PFY. So we not look at the current financial year, but we'll look at the preceding financial year. Now, so having said that, if somebody has to be a resident in India, then that person has to stay in PFY 182 days. Okay. But if the person is going out of India for these three purposes, like for taking up employment outside, or for carrying out any business or vocation outside, or any other purposes or circumstances, such as the person is not sure, it's uncertain that how long the person is going to stay outside India, then 182 day does not matter. Then what happens? Let me give you an example. Is suppose today we are in July. So let's say there is something comes up. I got an employment opportunity, and August I moved to, let's say, US. Okay. So I went out to take up employment in the US, but in the preceding financial year, of course, I mean, we are talking about PFY. So in the PFY, of course, I have stayed 182 days. But the moment I go out for the purposes of employment, from that date itself, I will be considered as person not resident in India, right? So because I have gone for these purposes. And for April to July, I may be considered as a resident. So in income tax, again, I'm just trying to draw a parallel. In income tax, the residential status once determined is for the entire year. But here it can be a split because of this concept. Now, just opposite, if we look at those who are coming into India, then again, they have to spend 182 days in India. But at the same time, they have to, so in the going out, you have those, if you are fulfilling those conditions, then you are becoming non-resident. But when you are coming in, then you have to fulfill both 182 days and these three conditions to become a resident of India. So if a foreigner comes, let's say, to work in India, and so he has come for the purposes of employment, but he or she will not become a resident unless in the PFY, the person has completed 182 days. So it is both the stay plus the purpose. In the earlier one, when you are going out, for simplicity's sake, I am saying it's the stay minus the purpose. Okay, just to kind of keep that clarity. But when you are coming in, then it is both stay and the purpose. In FERA, all these residential status used to be defined more linked to the citizenship and not to residency. In FEMA, they moved to the concept of residency and permanency. So whether you are actually permanently staying or not. So that's something which defines. So therefore, those who are coming in or even going out, so generally an Indian citizen going out will always have a history of staying in India in the PFY. So that will automatically be fulfilled. But for those who are coming in, they want to actually check that they have been in India for long enough and they have come for these purposes. And the purpose and the certainty is there that they are going to be staying for long. So therefore, for coming in, the visa also matters. So if somebody comes on a, say, tourist visa and stays for longer, then that is then the claim to become a resident in India, even after staying 182 days, becomes weaker because I'm on a tourist visa. I can after 182 days go back. But opposite to that, if I come on an employment visa, then I have a case of becoming a resident in India. So, yeah, so this is okay. Here, maybe I can speak one more specific category because so which talks about, so here it's a resident or a resident PRI, person resident in India, or person resident outside India. But there is one category, again, in employment. It can be person resident, but not permanently resident, which is like if you come for a 3-year assignment or lesser, then you fall in that category. So that's one exception here. That's the only exception for person who are coming and becoming resident, but not permanent resident. So I thought I'll just mention that. Okay, so now let's move to the concept of capital account and current account transaction. This is something which again, I'm kind of just keep drawing reference to FERA so that you know what all changes happened. So in FERA, there was no such distinction made. So for the first time, this distinction on capital and current account transaction was made only in FEMA. And as we all know, this is an economic concept, right? So current account, capital account, it comes from balance of payment. Yeah? Trade, I think Vivek and others spoke about this in detail. So, but when it comes to LRS, the limit applies equally, that we will come and see. So what is capital account transaction? Just quickly to give you this overview and a framework. I know that this is not our main subject, but I'm just trying to give you an overview. So assets and liability where it alters the nature, okay? And assets for a PRI for assets outside, and for person resident outside, it will be for the asset inside India. So vice versa. And specifically, this includes transaction which have been mentioned in section 6.3 of FEMA, where actually they lists out all the transaction, and they are again bucketed in 3 categories. So some transactions are actually prohibited. Some transactions are permitted with the approval of Government of India, various ministries, depending on which sector is the transaction linked to. And some transactions are approved by RBI. So those are the 3 lists. And some typical transactions, what are there? We will just quickly glance through the lists. And what a current account transaction are those transactions other than capital account transaction. And as we know, these are like short-term banking, any interest due on the loan, expense, your children is going for foreign education or foreign travel, medical care, and all these expense. So day-to-day expense, if you are remitting, these are more in the nature of current account transactions. Yeah. Now, quickly, if we have to look at the list, so Schedule 1, as I said, of capital account transactions. So investment in foreign security, foreign currency loans, which we discussed, transfer of immovable property. So these are the list. And under each item, there are, regulations issued, notifications issued by RBI as to how all these capital account transactions will be dealt with, what is permitted, what is not. So I'm not going into the detail of this. Maybe we can move, Janni, to the next slide. So these are the list of all capital account transactions. Yeah. Now, Schedule 2, this is a schedule where these are prior approval of Government of India required in Schedule 2. And then we have Schedule 3 where RBI approval is required. Yeah. Now, coming to current account transaction, maybe we'll spend some time here. So there are threshold limits which have been set. Again, withdrawal of foreign exchange by resident individual, meaning that you go and get rupee converted into Forex for your use through proper banking channel. And we know that for the purposes of medical, studies abroad, immigration, resident individual can avail foreign exchange facility, even for an amount more than, so these are the only 3 things where you can actually go beyond 250,000 limit of LRS. Provided, say, let's say immigration, then the country where you want to get migrated, if as per the laws of that country, the requirement is to pay more than 250,000, and if you provide that proof to the AD banker, you need not go to RBI, and the AD banker is satisfied, they will allow you to even transfer more than 250,000. Similarly, for medical, some treatment which requires more than 250,000, and you got a proof that yes, this will require so much of expenditure. Again, AD banker can allow you to transfer more. So these are, but one caution here, specifically for immigration. Nowadays, you all know that a lot of countries are offering, after this COVID, they are offering citizenship based on investment, right, in that country. Now, if your citizenship offer is linked to some investment in that country, let's say, like recently I was dealing with a case of Portugal, where they are offering that if you invest in some hotel industry, which is routed through their Ministry of Finance, you get a citizenship of Portugal. So there you cannot breach, because there you are investing in an asset to acquire a citizenship. So therefore their 250,000 limit will be applicable, number 1. Number 2, because you are investing in, you are doing a capital account transaction. So again, we will have to see whether an approval is required or not. But suppose where the immigration fee itself directly is more than 2,50,000, where you are paying to the Department of Immigration of that country to grant you the immigration, then that is something which is permitted. And similarly for university education. So suppose if there is some course which requires more than 2,50,000, so these are the only thing where you can actually, go beyond 2,50,000 without, and one more case, which I will be talking about a little later. Yeah, and right. So this is an overview on the current account transaction. Let's see what are the current account transactions. Just a few of them listed here. Gift, donation. Now, gift, again, important. Gift, if you are doing in rupee or in currency, foreign exchange, then it is a current account transaction. But if you are gifting immovable property, or if you are gifting shares and security, then that's not current account. Then again, it becomes capital transaction. Immigration we discussed, yeah, maintenance of relative, education, medical treatment, yeah. So these are all current account transaction. Yes, now definition of relative for the purposes of LRS, and we will see why it is important, is so a couple of places we saw if you have to maintain your relative outside, that's one, and two, later we will see that there are some joint limits available, joint investment available if you are trying to co-own some property outside and want to transfer funds, then that will come. But here the definition of relative has been taken from Companies Act. So that's the definition they have borrowed, and it's like quite wide. So I think most of the relatives in India parlance will get covered here. Now, so can a person resident in India acquire or hold an immovable property outside India? Yes, no? Yeah. So there are, again, I mean, so there are two categories. So one category is, suppose if you were already outside and at that time you were a non-resident and that time you had acquired and then you came back. So you are allowed to continue to hold that property. Similarly, if you have received it by way of a gift or inheritance from a person resident outside India, or if you have purchased immovable property out of the Forex held in an RFC account. Now again, RFC account is something when, say, you were working abroad or you had some source of income outside which was earned in Forex and you open that account. So then you are using that money to invest in the immovable property, then it is allowed. Otherwise, you can buy immovable property, again, subject to 2,50,000 limit under LRS without getting an approval. But the moment you go beyond 250, then again, you will have to go for approval. But again, if it's a foreign national, then this does not apply, of course, because then it will not come under India FEMA. A foreign national can anyway buy. And also, if there is a leasing of property which is less than 5 years, then it is permitted. Yeah. So the next one is, if an Indian citizen resident outside and PIO resident outside India purchase immovable property in India. So I think we discussed this, that they can, but except agricultural land, farmhouse, etc. Okay, so now we jump to the topic which we all were waiting for. Yeah. So liberalized remittance scheme, as we all know, is to streamline the process of remittances and not only streamline, but also regulate to some extent, right? And this is like available to all the resident individuals, be it minor or students. What is mandatory is when every time you use LRS, you have to fill a form A2, which is a simple form, and you submit it to the authorized banker. Some caution there is that you have to be really careful about using the code. So the purpose code is one field which you need to fill in that form, and there are some 200 plus codes. So some of them fall in LRS, some of them fall in, say, capital account transaction where your approval is required. And also, if you choose a wrong code by mistake, then maybe you are not falling in LRS and you are going somewhere else, right? So you have to be careful in choosing the code when you are submitting as for that form. Okay, so we all know that the limit for LRS is 2,50,000 USD. It's a financial year limit in one financial year, and it applies both to capital and current account transactions. So it's not separate for both, it's all put together. And even for current account transaction, for despite the purposes, this is one limit. Okay. So it's not qua the AD banker, it's not qua the purpose, it's qua the person who is remitting. So for one particular PAN, against a PAN, your limit is 2,50,000, irrespective of the purpose, irrespective of the type of remittance you are making, through which AD banker you are making, all that is immaterial. Yeah, so this is what I was talking about, that there are provisions which speak about, so if you are investing and trying to co-own some property outside, then you can make joint remittances. So provided individually you are fulfilling the terms and conditions. So like as a family, say 3 of you as a family, all 3 being the co-owner can jointly remit 7,50,000 instead of just 2,50,000. So that's permitted. Now, what is again here important is that, so this is like very common, and and I consider myself also guilty of this, is that when say you draw foreign exchange for your foreign travel, and then once you come back, you are left with that foreign exchange, right? We seldom go and return it to the AD banker, but the regulation is that within 180 days, we need to return it back to the AD banker, irrespective of the amount left, right? So, and similarly, so this was an easy example I gave, but so suppose you have invested somewhere using the Forex and you realize that investment. So again, that realization has to come back to India within 180 days, or unless you are reinvesting it, because it was an investment made out of Forex, like was a permitted transaction, and you realize it. But if you are not reinvesting, then within 180 days, it has to come back to India. Now, so LRS mostly is allowed. So all these are the coverages for LRS for education purposes, for medical purposes, for travel. In travel, we have 2 categories, we all know. So we have 2 international, like tour package program, if you are buying tours using a travel agent, or we are on our own, booking travel and all of that. So and then we have investments, purchase of property, gifting. So all of these, I've tried to just list down what all possible items which can fall within the LRS. Couple of them I want to talk about, maybe just one, which has been slightly contentious, is the investment in equity. So as long as if you are investing, so I said investment in shares, securities, and mutual funds. But if that is in listed stocks, let's say stock is listed in NASDAQ, NYSE, or anywhere recognized stock exchange, then it is under LRS. But if you are intending to invest in a non-listed equity, then there was clarification given by an RBI that that's not in LRS, that falls under OPI. So you'll have to go for approval. So that's something I wanted to bring on the table. Yeah. Now, what is the remittance procedure if you have to use the LRS? Of course, we have the form 2, which we give to the AD banker, and then the purpose, the declaration we have to make that yes, I have not breached the threshold. There is a declaration in the form that you need to manage. And then we need to give the KYC. KYC is pretty simple. KYC is nothing other than the PAN card, and your address proof is something which is required. So to that extent, it is extremely kind of simple. And the AD banker actually quarterly reports all the remittances which is routed through the AD banker in a return called ORFS. And that's where at an RBI level, it all get consolidated, and they are able to track whether you have used your 2,50,000 limit or not. So through this return, filing of return. But in the interim, that's why every time they take a declaration also, because it's a quarterly return. So you never know if you have exceeded the limit within that quarter itself, then you have to self-declare, and the AD banker will go on the basis of your declaration. So, and there are again FAQs are there, which says that AD banker is not at fault if you have given a wrong declaration. So they rely on your declaration and act as far as the thresholds are concerned. Purpose, yes, they will check. Okay, so now coming to the tax angle on the LRS, and then we will go into the specific LRS a bit later, where under various kind of remittances, what are the TCS rates, etc., all that confusion which happened, we will talk about it. But just before that, let me bring this amendment which came through the last budget, wherein they said that TCS shall be collected on foreign remittances, okay, on overseas tours and packages, and it will be payable by the so it will be. So when is the TCS due? So the TCS will be due when you are actually debiting, when the amount is debited, or when the buyer receives the amount, right? So whatever is earlier, that's the time when the this one TCS will become due. Okay, so for the authorized dealer means, so this we have anyways spoken. Overseas tour program, yeah. So overseas tour, what is the difference between a tour program and like you booking directly? So there are three aspects in any tour. You have the airline tickets, the hotel, and other expenses. So they say if out of these three, at least two are booked together, clubbed together, then it becomes a tour package. But otherwise, it's like a direct travel. Yeah. So TCS is applicable as of TCS is not applicable if the payment is less than 7 lakh. Now TCS is also not applicable for purchase of foreign goods or services from India. And I will come in slightly detail about it, and also company and business trips. So these are the three where TCS is not applicable. The exemption limit of 7 lakh again is, as I was telling about the overall 2,50,000 limit. Similarly, 7 lakh limit is also qua the remitter and not qua the AD or qua the purpose. So today I may be remitting for the purposes of education. Tomorrow I may be drawing for the purposes of my travel and maybe for medical reasons, but everything will be clubbed together to check this 7 lakh limit. It's not purpose-wise limit. Okay, so it's a very lesser threshold for in that matter. And again, it is for the financial year. Now, this is LRS spend. Yeah, that's what I'm saying. So it's not sufficient. So of course, they want you to pay TCS on remittances, right? If the resident making LRS spends through more than one authorized dealer, yeah, again, so it will all be clubbed. So if you want to go to various authorized dealers, of course, authorized dealer may not know, but again, they will take declaration. That's what I spoke about. And later, of course, everything. So today, if you ask me, they have some mechanism to track 2,50,000, but today they do not have a mechanism to track 7 lakh. And possibly that was one of the reason also for the deferment. So they are building software and internal systems to track this. So they will ultimately track it, right? Yeah, and you can. Okay. So rule 7, so until now, actually, now coming to the most controversial thing which came up, like international credit card usage, they said that TCS will be applicable. So which was actually exempt earlier, but a notification on 16th May 2023 created the whole, chaos, which said that any international credit card uses will also fall under that 2,50,000 limit, and TCS will be applicable. Now, practically, we can understand all sorts of challenges here. If you are making a foreign trip in a day, maybe 10 times you are swiping the card, 15 days, 150 transactions, small amount, right? How do we track? How do we pay TCS, right? When do we pay TCS on that, correct? Because it's like immediate debit. So this was like cumbersome. So of course, the presentations were made, and I think they realized that this is something which is not going to fly unless we are kind of fully prepared. So then I think in June, they came back and they said that this is deferred for the time being. But let's see what comes back. Now, the TCS rates, as I was talking in the budget, they enhanced from 5% to 20%. So earlier it was 5%, and it was, so we go to that table. Sorry, just one slide before that. Okay. Yeah, so let's talk about this circular. So this circular 10 actually brought some clarity, where again, that is what I was talking about, that the banks and financial institutions requested that additional time to modify their systems, etc., so that they can track, and therefore the threshold limit, 7 lakh threshold limit was restored. And so now the effective date has been pushed to October. So now we are, so whatever changes they brought in the LRS TCS scheme is same as it was earlier. So now everything got postponed to October 1st. Now we will see, I've just done some comparison as to how it will pan out. So let's divide it into various sections. So first, let's look at education. So earlier, if you remember the slide I was talking about, so TCS on LRS for education and medical was exempt. It was not there, right? So, so they are saying now, before the Finance Act came, if you are funding the education from loan fund, then it was only 0.5%. Okay. Up to 7 lakh, it was nil. Beyond 7 lakh, it was 0.5%. So post October, it also remains the same. There is no change as far as education is concerned. Same education self-funded, then the 0.5 becomes 5%, which was earlier also. So nil up to 7 lakh, beyond 7 lakh, 5%, it remains the same. But LRS for any other purposes, that takes a significant change. So that's where they are saying earlier up to 7 lakh, it was all nil, and beyond 7 lakh, it was 5%. Now that has become 20% beyond 7 lakh. As far as overseas tours, and this was slightly different. So in the overseas tour program package, there was no threshold. So earlier also, starting from first rupee spend, 5% was applicable. So they have not changed that. They have not applied the threshold here, right? So they are like a typical bania, right? So whatever is there, we don't want to give away that. So, so 5% till 7 lakh continues. But the moment 7 lakh limit you breach, then 20%. So that is why these 3-4 categories, that's how it will now pan out. Okay. So what I've done is I've tried to go in little detail and put in tables so that we can comprehend. In the gist, that is something which I just spoke about. But if it is, say, let's say for education purposes. So first column talks about the LRS limits. So overall LRS limit remains 2,50,000. Of course, for education, the exception I've already spoken, that if it is more than you can use. The exemption limit of 7 lakh is applicable, and up to the TCS rate for up to 30th September is 0.555. And then after October also it remains the same because it relates to education. Now education, we had 3 categories. One funded by a loan, one funded via self, and another is related expenses. So education doesn't only confine to your tuition fee, etc., but the student is living in a hostel or the related travel, etc., all that all will get qualified as education expenses. Now coming to medical treatment. So similarly, medical treatment up to 7 lakh is exempt. Now beyond 7 lakh, 5%, and this remains even after 1st October, it remains so. Now, medical also, there are 2-3 categories. So suppose you specifically went for the medical treatment. This situation is where you were traveling, not for medical treatment, but fell ill and therefore required some severe medical attention and all of that. So this is what this category. And yeah. So next is now going abroad for employment. Now, this is where I spoke about that specific one more category. Here, so 2,50,000 is there. But suppose if you after deducting taxes and provident fund, etc., so whatever is the statutory levy, if that has been deducted, then balance all you can remit actually. Okay. Immigration, we spoke about the immigration fee thing. So again 5% becomes 20%. Gifts up to 7 lakh is exempt and 5% becomes 20%. Yeah. Same is the situation for loans. Business trips are actually exempt. We spoke that if it's a business trip, then there is no TCS applicable on TRS. Now, this point number 9A is something which is again a bone of contention, because if it's a corporate structure and say I travel as an employee of Vialto Partners, then this is like construed as a business trip because I buy and then I kind of claim from my company. So, but if a proprietor under whose PAN itself the expense is happening directly, then the AD bankers are not willing to consider that as a business trip, and this is being contested currently. So let's see what is the kind of clarification on that. But if you genuinely see, then that's also a business trick. Just because of their business structure being proprietorship, you cannot deny, right? Yeah, private personal visits, overseas tour package. So as we said that for overseas tour packages, from the first rupee itself, 5%, and beyond 7 lakh, 20%. So that's the limit. Yeah. So now this is extremely important. So what is TCS? So TCS is nothing but what happens is that I collect that tax and it reflects in my 26 CAS as a TCS. And these are all expenditure, right? So ultimately, you will not be paying, it will not be taxable. These are all expenditure for you. So ultimately, you will get back this money. But when will you get back? When you will file your return after 1 year in July. After that, then they will process and you get. So it's nothing but just money locked for that period of time. Now, why they are tracking all this is from the other perspective, that to whom you are spending, whether if those transactions, any of those transactions has to be taxed in India, then whether that is escaping tax. So to kind of do their own tracking, they are making us the scapegoat or victim, isn't it? Yeah, correct. Yeah. So that is one. And then what happens is that, so there is a, now this is something which you cannot adjust like an advance tax. So if you are paying advance tax or you are deducting TDS, then you get the credit then and there. But TCS, no credit. TCS, your refund will come only after. So in fact, a lot of corporates, and I know NASCAM has also represented that why not for PRIs consider this TCS equivalent to TDS or advance tax and adjust it, rather than waiting for the refund. So that those representations have been made. Let's see what happens. Yeah. Yeah, so we discussed that TCS is not applicable on purchase of goods or services from foreign websites while remaining in India, because those transactions are not actually covered under LRS. So that's the reason that this is not. Yeah, so now this is another interesting one for topic on ESOP. So now we make employers actually make remittances in relation to sweat equity, right? So suppose if equity ESOPs have been issued for foreign company for the Indian employees, the Indian subsidiary headquarter company for ESOPs have been issued, and you pay the vesting price or the exercise price, sorry. So then that exercise price the employer remits. Or suppose if it's a employee stock purchase plan, where what happens is that maybe you are offered share on discounting, let's say at a 15% discount from the market rate, then employer collects 85 every month from you, and there is a 6 months vesting, let's say. Then over the 6 months, 85 into 6, whatever has been collected will be remitted out, and then worth 100 stock will be bought on your behalf. And so on this remittance also comes under the LRS purview. And not only that, this will also qualify for a limit of 2,50,000 on aggregate basis. But here, at least one relief is that if for the purposes of ESOP remittance itself, suppose if I have to, the employer has to remit 400,000 USD, then it is allowed. But having said that, then you have exhausted your 250,000 LRS limit for all other purposes, right? So that leeway is there for the ESOP. Or if I had to give you another example, let's say 150,000 you used for ESOP, then you are now left with only 100,000. So therefore, for the purposes of threshold, they have included it, but if it exceeds, then they are allowing it. So that's how kind of this has been brought in. Now, interestingly, and this is a question which comes very often from industries, because when shares, these stocks options vests, so on vesting, you pay tax, perquisite tax, right? So on a fair market value. So suppose there was a vesting period of 3 years, and every year 30% shares vest, and you pay an exercise price, then your options gets converted and you are issued shares. Okay. So under section 17(2), you actually pay perquisite tax based on the fair market value on the date of vesting minus the exercise price which you have paid. You already pay a TDS on that. So the question, then the question is coming that we are paying TDS and also paying TCS on remittances. But then the clarification is both the basis is different. One is based on the say valued income. It's not an actual income. It's actually a notional income, because unless I sell it, so I have paid perquisite tax on a notional perquisite value. But if I do not sell it and the price dips, then I would have paid tax on an imaginary gain. If it increases, then it's fine. But if it dips, then I would have paid. But here you are paying TCS on a remittance. So they said that because the basis is different, so both will be applicable. Okay. And then there are related reporting requirements. So until now, in ESOP transactions, the reporting requirements were annual. And it was not very kind of obligatory, because it required only total number of shares, what is the percentage, etc., and all, not much. But now they have made it more detailed and they have made it biannual. And what all is covered in that? So now there is a specific. So first thing is that if the total ESOP holding is less than 10%, then it qualifies for this reporting. If it's more than 10%, then it goes under different segment. So here there is one OPI form which the employer has to file with the AD banker. Now this was notified in August, and they have to submit within 60 days from the end of the half year. So 29th November, and I think so March, April, May, 30th May, I think. So it's not 2 months, it's 60 days actually from the end of the half year. And so there they have to actually report. We have it on the next slide. So what all you need to actually report? Come to the next. Yeah. So the net amount of ESOP investment held abroad, opening balance on a cost basis, and then investment made during the half year, disinvestments made, net amount, remittance. So all these details you need to make. Now the confusion is that what is cost basis? If it's an RSU, generally a restricted stock unit is given to you at a 0 price. So you are not paying actually any price. But when you will realize it, you will get the, so whether I report it at a fair market value or I give it a 0 value, or even ESPP we just discussed is given at a discounted price. So do I report at a discounted price or at a fair market value? So there is no clarity on this. These forms have recently come. And so what the stand we are suggesting is that whatever basis you take, be consistent, because you have several things you need to report: the opening balance, the disinvestment, the investment, etc. So if you are taking FMB, then take FMB all through. If you are taking cost, then take cost all through. So that's the only thing we are suggesting. But this is something which has really become a concern. Now, another thing is similarly like 7 lakh threshold. There is no way of tracking. So they are asking, the AD bankers are asking the employer to give an undertaking on behalf of the employee that the threshold limit is not breached. Okay. Now employers are asking, for my 1,000 employee hike, how can we give the undertaking, right? So do we in turn take an undertaking from the employee? Of course, that may have to be done unless a system is put in place. But then to that extent, so much administrative burden on the employers, right? I think possibly why this annual reporting was made 6 months reporting. Any guesses that why they brought it down from 1 year to 6 months? Sorry, come again? Yeah, no, I'm talking about this ESOP reporting, because here you see they are asking for your investment, disinvestment, sale, remittances. So if you relate it back to what I was talking about, that if you realize some asset, then within 6 months you need to repatriate, right? So suppose if if it was 1 year, then a lot of times what was happening, employees were selling and they were going unreported. And if the employee do not offer it for tax, then there was a tax leakage. So now to track that whether within 180, so from here they will exactly know within 6 months what all has been sold and whether those remittances has come. So both for FEMA purposes also and for tax purposes also, now it's a complete tracking. So that is the reason they reduced it to 6 months. Yeah. How are we doing on time? Okay, so do we move to case studies? I've just jotted down some small case studies. Okay. So X, who is an Indian citizen, leaves India for the first time for employment and comes back for a vacation. What will be his residential status in India in FY 2021 under FEMA? And interest earned under NRE. So whether it will be exempt. Anyone wants to attempt this? Sorry? Non-resident, yeah. Because he left for the purposes of employment. Yeah. Right. And NRE interest, as we know, under Section 10 will be exempt. So, yeah. Is likely to inherit from her father some immovable property. Are there any restrictions under the FEMA for holding such property? Yeah, PROI, so person resident outside India, right? So if it is a person resident outside India, then they can actually hold and invest in Indian currency. No, agricultural land is not permitted. Farmland, agricultural land is not permitted. No. Inheritance, maybe I need to check. Yeah, inheritance possible. Yeah, okay. Not repeated. Yeah, correct. Whether X remit sell proceeds of, yeah, so same. So can she remit? Yes, up to $1 million. So there is a specific threshold prescribed up to $1 million. The remittance can happen through the AD banker. Yeah. So as per LRS, you have to be within the LRS limit. But if you breach the LRS, then you have to go for approval. Okay, so PROI jointly, as all those 4 points we discussed. Yeah. This one, purchase of immovable property in India. Yeah. But again, 2,50,000 limit will be applicable. Foreign national, can they acquire property in India? Sorry, not for foreigners. Yeah. Go back, Jenny. So, can Indian citizen resident outside India? We said except farmland, agriculture. Is there any cap on foreign exchange that can be drawn for permissible capital account transaction? Same, that 2,50,000. Yeah. Then we come to this one. Foreign national acquire property in India. Yeah. So if it's a lease of less than 5 years, it is okay. But generally, inheritance again is permissible. Yeah. Can a resident continue to maintain an account outside India, which was opened by him when he was a non-resident? Hmm. 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 So if your status changes, then you need to redesignate that account as an NRO. But if you come back, then it becomes a normal. If you are a PROI, then NRE account is permitted. The moment you become PRI, then you need to convert. But this is because he has opened it when he was outside. So therefore it can be maintained. In India, so if he becomes a non-resident outside, I mean, then the account can be converted. Rupee account cannot be maintained. So it has to become an NRE. Yeah. Okay. Yes. Yeah. Yeah. Hmm. 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 Outside India. AD banker. Correct. Correct. What he did was, after that he changed his visa from student from A1, what some they call in US. F1. F1 is student visa. F1 he would have gone on, and then he became H1 employment. Yeah. 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 Hmm. Hmm. Yeah. Yeah. No, it is extremely important actually. Yeah. Yeah, it's not intentional. A simple act of negligence actually. Yeah. Yeah, yeah, yeah. So what we do, we day in, day out face this expatriates who come and work in India when they are going back actually after completing their assignment. Then a lot of times they say they do not bother to report when they are completing and going back, right? But what is important is now, because they are completing their assignment, their status in India from resident becomes non-resident. So we need to go and change the account status in India. So that becomes very important, because for them maybe now, because they are contributing to Provident Fund, all those remittances will come. So they need to keep that account, but it has to be redesignated as NRO. So it cannot continue like that. Couple of other interesting, maybe just one. Forex this NRI transaction I wanted to speak about, and which is like a kind of a difficult situation we all deal with. So if you are selling property to an NRI, or you are renting a property of an NRI owned, then you need to deduct TDS, right? There is no threshold. And unlike your 194 IB, where you can pay under PAN, here you need to actually take a TAN number as an individual to deduct the TDS and do all the withholding formalities. right? So this is like a real pain. And not only that, and once suppose that transaction is over, rent is over and all, then you need to go and surrender the 10, because you are not into business. You are every day not doing transactions where you will be deducting tax, right? So then you need to go and surrender. So this is again, so why can't this be made equivalent to like a 194 IB, and why a TAN is required? So some of these procedural things, changes comes and remain there. And like, again, this is one area which is being represented, but it's like as of date, it continues to be the pain point. Yeah. Okay, I think that's all from my side. Any questions or anything, or maybe we can, yeah. OPI, ODI, sorry, ODI, you are right. Yeah. You can, when you file your return, that time you will have to claim a refund. You cannot take the credit like a TDS. So suppose if the TDS happens in your account or advance tax you pay, then against the total tax payable balance is something, if it is like you pay or you get a refund. So TCS is not like that. It's not equivalent to the TDS or an advance tax. Yeah, no, no, TCS, you cannot adjust it like that. Yeah, like a TDS, you cannot adjust TCS. So in fact, if you see how will it, so you have to file the quarterly return, and in the quarterly return, there is no column for reporting TCS. It's for TDS, but for TCS, it's not there. So how will you actually because it has to reflect like either a TDS or a TCS, then only you get the credit. Sorry, TDS or an advance tax. Sorry. No, no, it will reflect in 26 AS. All I'm saying is that you cannot knock it off against the tax payable. So only when you file your tax return, that's only when you will be able to claim. So, okay, let me give an example. So let's say your tax payable is 10,000 rupees, okay? And tax payable is 10,000 and you have a TDS of, let's say, 5,000, but let's say you have a TCS of 10,000, okay? Still, you will have to actually pay 5,000, because 10,000 tax payable minus TDS 5,000 tax payable you will have to pay despite you are having 10,000 TCS here. So that cannot be adjusted. Only when you are filing your return, then TCS you can claim as a refund. That time you can claim both. Yes, yes, yes. No, no, correct. But all I'm saying is, so in my example, so if this was so, then in my example, you don't have to pay extra 5,000, right? So all I'm saying is that if you look at the flow of calculation, then your tax payable, less advance tax paid, less TDS, less TCS is not there. That is below the line. That is below the line actually. Otherwise, the TCS, if it was adjusted, then you don't have to pay extra 5,000, no, at that point in time. So that credit is not available. And that is what the representation has been made. LRS, I don't think. But TCS and LRS is not creditable. TCS on immovable property again creditable, but TCS on LRS is not creditable. Yeah, sorry. So it is, so that it was inherited, the property was in. And what she wants to do? She wants to sell and remit the funds outside? Okay, maybe we can discuss offline. Okay, then, yeah, thank you so much for your patient hearing. Thank you.
We learned how do we get foreign investments into India by CA Himanshu Agarwal sir, and then learned how do we invest overseas by Vivek Mallya sir. And definitely many associates, if not consulting FEMA practicing chartered accountants like you all, will end up with some of the other compliance issues. Don't we need an advocate to get our clients out of that issues? Was very well dwelt upon by along with redressal mechanism by CA Advocate Chidanandara sir. And by the time we are through these things, reporting compliances arise, and the Department of Income Tax would be waiting for collecting tax, which was very well dealt upon by CA Ravi Jain sir. And on behalf of members present here and all the managing committee members of Bangalore branch of SIRCF ICI, we would like to hand over a memento to the speaker as a token of gratitude and respect. Can I request CA Kavita Parmesh, Treasurer, to do the honors? Thank you, ma'am. That makes an interactive workshop on FEMA. It's coming to an end. A round of applause for all the participants here, and very special applause for all the 4 speakers who have made this workshop a fantastic and memorable one. Thank you one and all. With a request for all of you to register for our state level conference to be held on 11th and 12th August 2023. I, CA Manjunath Yamahallu, Secretary for the branch, sign off for the day. Thank you.